Swayam Prabha. Digital India. Educated India.
Yogah Karmasu Kaushalam.
Hello students, my name is Dr. Chetna Marwadi, working as Assistant Professor in SD School of Commerce, Gujarat University, Ahmedabad. Today, we are going to discuss about definitions under Income Tax Act of 1961, residential status, incidence of tax and exempted incomes under section 10. Let's start with the objectives. Number 1. To understand the role of legal definitions of Income Tax Act of 1961 and their legal utility. Second, to understand significance of different residential status for total income determination. Third, to understand relevance of type of income and place of income which influence total income determination. Fourth, to understand application and importance of exempted incomes on which tax is not payable. In this module, we will understand about basic concept and or definitions under Income Tax Act of 1961. Apart from this, we will study about the residential status of an individual, incidence of tax and exempted income under section 10. This module is divided into 5 parts. This is part 1 where we will study about different definitions and theoretical and practical discussion on residential status of an individual. In this part, we will acquire information on residential status of resident but not ordinarily resident. The main source of income of government is tax collection. India has 3-tier political structure which includes local government, state government and central government. Different types of taxes are being collected at different level. Generally, there is no duplication of tax collection by 2 or more governments. Further, taxes are categorized into 2 main categories, that is direct and indirect taxes. Direct taxes are imposed on income and profits, whereas indirect taxes are levied on goods and services. Income tax is levied under the head of direct taxes. Income tax is collected under 5 heads. These includes number 1, income from salary, number 2, income from house property, number 3, income from profit and gains of business or profession, number 4, income from capital gain and number 5, income from other sources. We will discuss information about all these heads in subsequent modules time to time. In this module, we will discuss about number 1, basic concept, number 2, residential status, number 3, incidence of tax and number 4, exempted income under section 10. To understand income tax, it is essential to understand basic concept and relevant aspect of Income Tax Act of 1961. All these concepts are legally formed. They have legal interpretation and so their meaning plays a vital role in case of dispute, if any. These basic concepts are A. Income, B. Agriculture income, C. Person, D. Assessee, E. Assessment year, F. Previous year, G. Gross total income, H. Total income, I. Maximum marginal rate of tax and J. Permanent account number, which is called as PAN. First concept is income. It is given under section 2 subsection 24. Income is very important definition from the viewpoint of Income Tax Act because nature and type of income decides the incidence of tax. Income includes number 1, profits and gains, number 2, dividend, number 3, value of any perquisites or profit in lieu of salary taxable under clause 2 and 3 of section 17. 4. The value of any benefit or perquisites, whether convertible into money or not, obtained from a company either by a director or by a person who has substantial interest in the company, or by a relative of a director or such other person, and any sum paid by any such company in respect of any obligation which but for such payment would have been payable by the director or other person aforesaid. 5th, any sum chargeable to income tax under clauses 2nd and 3rd of section 28 or section 41 or section 59. 6th, any capital gains chargeable under section 45. 7th, the profit and gains of any business of insurance carried on by a mutual insurance company or by a cooperative society computed in accordance with section 44, or any surplus taken to be such profit and gains by the virtue of provisions contained in first schedule. Next concept is agriculture income, which is given under section 2 subsection 1. Agriculture income means A. Any rent or revenue derived from a land which is used for agriculture purposes and is either assessed to land revenue in India or is subject to local rate assessed and collected by the officers of the government as such. B. Any income derived from such land by number 1 agriculture, or number 2 the performance by a cultivator or receiver of rent in kind of any process ordinarily employed by a cultivator or receiver of rent in kind to render the produce raised or received by him fit to be taken to market, or 3. The sale by a cultivator or receiver of rent in kind of a produce raised or received by him in respect of which no process has been performed other than the process of the nature described in paragraph 2 of this subclause. C. Any income derived from any building owned and occupied by the receiver of the rent or revenue of any such land, or occupied by the cultivator or the receiver of rent in kind of any land with respect to which, or the produce of which, any process mentioned in the paragraph 2 and 3 of the subclause B is carried on, provided that the building is on or in the immediate vicinity of the land and is a building which the receiver of the rent or the revenue or the cultivator or the receiver of rent in kind by reason of his connection with the land requires as a dwelling house or as a storehouse or other outbuilding. Third concept is person, which is given under section 2 subsection 31. Person includes number 1 individual, number 2 a Hindu undivided family, number 3 a company, number 4 a firm, number 5 an association of persons or a body of individuals whether incorporated or not, number 6 a local authority, and number 7 every artificial judicial person not falling within any of the preceding subclauses. Next concept is assessee. It is given under section 2 subsection 7. Assessee means a person by whom income tax or super tax or any other sum of money is payable under this act, and it includes first every person in respect of whom any proceeding under this act has been taken for the assessment of his income or of the income of any other person in respect of which he is assessable, or of the loss sustained by him or by such other person, or of the amount of refund due to him or to such other person. Second, every person who is deemed to be an assessee under any provision of this Act. For example, Mr. X owns a commercial building from which he earns rent income. He has prepared and signed a will stating that property should be handed over to his niece after his death. Upon his death, her niece will be considered as the executor of the property, that is deemed assessee. She will be responsible for paying tax on the rental income thereon. Third, every person who is deemed to be an assessee in default under any provision of this Act. Assessee in default is a person who has failed to fulfill his statutory obligations as per the Income Tax Act, as such not paying taxes to government or not filing his income tax return. For example, an employer is supposed to deduct taxes from the salary of his employees before disbursing the salary. He is then required to pay the deducted taxes to the government by the specified due date. If the employer fails to deposit the tax deducted, he will be considered as an assessee in default. Next concept is assessment year, which is given under section 2 subsection 9. Assessment year means the period of 12 months commencing on the first day of April every year. Thus, assessment year of 2021-22 start on April 1st 21 and ends on 31st March 22. Assessment year may be defined as a year in which the income of the previous year is to be assessed. During this period, income stated by the assessee to the Income Tax Department is assessed by the Income Tax Department to check the authenticity of the information of income. Next concept is previous year. It is given under section 3. For the purpose of this Act, previous year means the financial year immediately preceding the assessment year. When assessment year is 2021-22, its financial year will be 2020-21 is previous year. For example, previous year 2021, it is the previous year of assessment year 21-22, and assessment year 21-22 is the assessment year of the previous year 2021. Previous year 2021 is the financial year during which income is earned by the assessee, and assessment year 21-22 is the authenticity and correctness of income is assessed by income tax officer. Next concept is gross total income. As per section 14, income of a person is calculated under the following heads: salaries, income from house property, profits and gains of business or profession, capital gains, and income from other sources. The aggregate income under these heads is termed as gross total income. In other words, gross total income is that income from which no deductions of section 80C to section 87 are deducted. Next concept is total income. Total income of an assessee is gross total income as reduced by the amount deductible under section 80C to section 80U. Next concept is maximum marginal rate of tax, which is given under section 2 subsection 29C. As per the section 2 subsection 29C of the Income Tax Act of 1961, unless the context otherwise requires, the term maximum marginal rate means the rate of income tax including surcharge on income tax, if any, applicable in relation to the highest slab of income in case of an individual, association of person, or as the case may be, body of individuals as specified in Finance Act of the relevant year. Next concept is permanent account number, which is generally known as PAN number. Permanent account number is 10-digit alphanumeric number issued in the form of a laminated card by the income tax department to any person who applies for it or to whom the department allots the number without an application. PAN enables the department to link all the transactions of the person with the department. These transactions include tax payment, TDS or TCS credit, tax deducted at source or tax collected at source credit, returns of income, specified transactions, correspondence, and so on. PAN thus acts as an identifier for the person with the tax department. PAN was introduced to facilitate linking of various documents including payment of taxes, assessment, tax demand, tax arrears, etc. to relating to an assessee to facilitate easy retrieval of information and to facilitate matching of information relating to investment, raising of loan and other business activities of taxpayer collected through various sources, both internal as well as external, for deducting and combating tax evasion and widening of tax base. A typical PAN is AFZPK7190K. First three characters, that is AFZ, in the above PAN are alphabetical series running from AAA to ZZZ. Fourth character of PAN, that is P, in the above PAN represents the status of PAN holder. P stands for individual, F stands for firm, C stands for company, H stands for HUF, A stands for association of persons, T stands for trust, etc. Fifth character, that is K, in the above PAN represent first character of PAN holder's last name or surname. Next four characters, that is 7190, in the above PAN are sequential number running from 001 to 9999. Last character, that is K, in the above PAN is an alphabetic check digit. Now, we will study about two important elements which decide quantum of tax liability. Number 1, residential status, and number 2, incidence of tax, that is chargeable income. There are several factors which decides the taxability of an assessee. These factors are citizenship, age, place of income, type or nature of income, assessment year, previous year, etc. Along with these factors, residential status is also one of the important factor. Residential status is basically dealing with the stay of taxpayer in India. Now, we will discuss information about residential status and the relevance of residential status on income tax liability. In the continuation of determination of tax liability, nature of income also plays an important role. After studying residential status provisions, we will acquire the information for tax incidence, that is chargeable income. residential status. Section 6 is relating to determination of residential status of different entities. These entities are: number 1, an individual; number 2, Hindu undivided family; number 3, a firm or an association or a body of individual; number 5, a company; and number 6, every other person. In this module, explanation is confined to the residential status of individual only. An individual may be: number 1, resident but not ordinarily resident; number 2, resident and ordinarily resident; number 3, non-resident; and number 4, deemed resident. For each residential status, specific conditions are given in Income Tax Act. Let's discuss first residential status, which is resident but not ordinarily resident in India. Under section 6, subsection 1, an individual is said to be resident in India but not ordinarily resident in India in any previous year if he satisfies at least one of the following conditions. There are two basic conditions. Basic condition A: he is in India in the previous year for the period of 182 days or more. And basic condition B: he is in India for a period of 60 days or more during the previous year and 365 days or more during 4 years immediately preceding the previous year. There are two exceptions where basic condition B is not applicable, only basic condition A is applied. Case number 1: when an Indian citizen who leaves India during the previous year for the purpose of employment outside India, or an Indian citizen who leaves India during the previous year as a member of crew of an Indian ship. Case number 2: when an Indian citizen or a person of Indian origin who comes on a visit to India during the previous year, and to determine his residential status, 120 days shall be applicable instead of 182 days as per the provision of Finance Bill of 2020, only if his total income other than income from foreign sources exceeds rupees 15 lakh during the previous year. A person is deemed to be an Indian origin if he or either of his parents or any of his grandparents was born in undivided India. It may be noted that grandparents includes both maternal and paternal grandparents. Undivided India means before partition of India and Pakistan. In these two cases, an individual will be resident but not ordinarily resident in India only if he is in India during the relevant previous year for at least 182 days in case of number 1 and 120 days in case of number 2. Let's understand this concept of resident but not ordinarily resident with example. Illustration 1. Sri Ramesh was born in India in 1946. He is an Indian citizen. His son is settled in America. During the previous year of 2021, Mr. Ramesh left for America on 31st March 20 and came back to India on 31st January 2021. Further, his stay in India in last 4 years immediately preceding to current previous year was 366 days. Determine residential status of Mr. Ramesh for the previous year 2021. Answer will be: he is in India during previous year 2021 in the month of January for 1 day, in the month of February for 28 days, in the month of March for 31 days. So, total stay in India is 60 days. Let's determine residential status of Mr. Ramesh for previous year 2021, assessment year 21-22, considering his citizenship as Indian and he is of Indian origin. First of all the conditions of resident but not ordinarily resident will be examined. Basic condition A, which says he is in India in the previous year for a period of 182 days or more. Day of stay in India that we have calculated is 60 days. It means basic condition A is not satisfied. Basic condition B says he is in India for a period of 60 days or more during the previous year. So, he is in India for 60 days. So, part of basic condition B is satisfied, and second part of basic condition B says 365 days or more during 4 years immediately preceding the previous year. Here also he is there in India for more than 365 days. It means he is satisfying both the condition of basic condition B. He is meeting the conditions of resident but not ordinarily resident. Therefore, his residential status would be resident but not ordinarily resident. Illustration 2. When an Indian citizen who leaves India during the previous year for the purpose of employment outside India, or an Indian citizen who leaves India during previous year as a member of crew of Indian ship. Mr. Prashant is an Indian citizen and left India on 1st April 2017 for employment reason. He landed on Delhi airport on 1st April 2021 and visited his native place Ambala and left India on 29 September 2021. Determine residential status of Prashant for the previous year 21-22. How your answer will be changed if he leaves India on 28 September 2021. For calculation, we need to calculate his stay in India during the previous year. So, his stay in India in days during 1st April 21 to 29 September 2021 will be: for April 30 days, May 31 days, June 30 days, July 31 days, August 31 days, September 29 days, making it total of 182 days. If he leaves India on 28 September 21, his stay in India will be of 181 days. Now, let us determine residential status of Mr. Prashant for previous year 21-22, assessment year 22-23, citizenship as Indian. First of all, conditions of resident but not ordinarily resident will be examined. Basic condition A, he is in India in the previous year for the period of 182 days or more. Days calculated is 182 days. It means he is satisfying the basic condition number A. Basic condition B says he is in India for a period of 60 days or more during the previous year and 365 days or more during 4 years immediately preceding the previous year. Since he is an Indian citizen and left India for employment purpose, this condition is not applicable. He is meeting conditions of resident but not ordinarily resident because his stay in India is 182 days. Thus, his residential status will be resident but not ordinarily resident. Second, if he had left India on 28 September 2021, his residential status will be non-resident because his stay will be of 181 days. This aspect is discussed in detail in Part 2. Illustration 3. When an Indian citizen or a person of Indian origin who comes on a visit to India during the previous year and to determine his residential status, 120 days shall be applicable instead of 182 days as per the provision of Finance Bill 2020. A person is deemed to be an Indian origin if he or either of his parents or any of his grandparents was born in undivided India. Mr. Natwarlal is not Indian citizen, but his parents were born in Calcutta in the year 1945. Mr. Natwarlal came to India first time on 30th April 2021 and left India on 28 August 2021. What will be his residential status? How your answer will be changed if he leaves India on 26 August 2021? Assume his total income other than income from foreign sources exceeds rupees 15 lakh during the previous year. Let's determine his residential status. For that purpose, we need to calculate stay in India in days. His stay in India in days: for April 30 days, for May 31 days, for June 30 days, for July 31 days and for August 28 days, making it 121 days. Now let's determine residential status of Mr. Natwarlal for previous year 21-22, assessment year 22-23, considering Indian citizenship. First of all the conditions of resident but not ordinarily resident will be examined. Basic condition A: he is in India in the previous year for a period of 120 days or more. We have calculated 121 days. It means basic condition A is satisfied. Basic condition B: he is in India for a period of 60 days or more during the previous year and 365 days or more during 4 years immediately preceding the previous year. This condition is not applicable to Indian citizen or person of Indian origin if he visits India. He is meeting the conditions of resident but not ordinarily resident because his stay in India is of 121 days. Now, if he has left India on 26 August 2021, his residential status would have been non-resident because his stay will be of 190 days only. In this part, I have studied about number 1, different important definitions of Income Tax Act of 1961 like income, agriculture income, person, assessee, assessment year, previous year, gross total income, maximum marginal rate of tax and permanent account number. All these definitions have their own precise meaning and are to be understood in the given context. These definitions are very crucial from the viewpoint of Income Tax Act. Their existence and meaning are minimizing the dispute between the taxpayer and the income tax authority. 2. There are several factors which have vital influence on income tax liability determination and residential status is one of them. There are 4 types of residential status of an individual like: first, resident but not ordinarily resident; second, resident and ordinarily resident; third, non-resident; and fourth, deemed resident. In this part, we have covered resident but not ordinarily resident with appropriate illustration and discussed about stay of taxpayer in India, that is 182 days or 60 days and 365 days. In part 2, we will continue discussion on number 1, remaining 3 residential status of an individual, that is resident and ordinarily resident, non-resident and deemed resident, with relevant illustration of them, and number 2, incidence of tax. Thank you very much for listening carefully.